Hey, welcome back, Sat Pulse family. Yesterday, we talked a little bit about the power of Bitcoin and why I value Satoshis and why I think Bitcoin has a strong future. Today, I'm going to get into a little bit of the news and help you understand a little bit of the framework of where I'm coming from. So the first one I'm going to talk about today is Goldman Sachs. Everyone is talking about Goldman Sachs right now. And it's really interesting, right? Because you see over here, they went from an expected of 318 a share to 308 a share. And that's not really what catches my eye the most. What catches my eye the most is right here. It talks about a second quarter profit fell 58%, right? So when a company is losing 58% of its profit in a quarter, and you're only seeing a 1% decline on the share price based on that news, raises red flags to me. What do these guys know that other people don't know? And they did actually mention a little bit about commercial mortgage-backed securities, as Nobody Special Jack has pointed out today, that this is one of the first times big banks are coming forward saying, we are seeing problems on our balance sheet due to commercial mortgage-backed securities. So that's a real interesting perspective as you just take that and put it in the back of your mind as we move forward through this discussion. Today, we're going to take a look at what's going on with wheat as well. We understand that what happened in the Russia-Ukraine deal that's going on, we're going to keep things really benign and simple for today and just say that there's a lot of war still continuing. Bridges are being blown up. And right now, they're going back on the trade agreement they said with Turkey to let the wheat flow through the Black Sea without any issues. So what we're talking about today is what's really happening with our wheat prices is we understand that it's going to cost more for them to start shipping it through rail versus their traditional method that they've been doing now. One of the things I want to talk about is how we can use Bitcoin to help us hedge against what we see coming in our markets. And we're going to continue talking about that even as we go through. Now, again, this is just because you see that they ended the grain deal. And when the grain deal ends, you know what's going to happen. They're going to make it more expensive to get the same goods elsewhere. They're not going to take the risk of letting their product go to loss. They're going to find a more expensive route to get it to the consumer. And as we see wheat prices go up globally, I suspect it's something that we're going to keep an eye on for a while because we will see it hit in the United States as well. Following on that news, it's really important to understand what's happening with the DXY, right? So the DXY, for those of you who haven't understood where we are with the DXY yet, it's a basket of currencies in which the dollar is measured against. So a big portion of that is other fiat currencies around the nations that are going to be going around globally, and that's how the dollar is measured. And what we see happening now, as Joe Brown points out from Heresy Financial, is they're pricing in the future value of the dollar. They understand that based on the interest rates and what's happening geopolitically, that the dollars are going to be coming home, especially as some of these interest rates, these lower interest rate loans mature and they're going to have to roll over their debt. So this is something I want to keep my eye on, especially because we have seen in previous history that there has been a little bit of correlation between traditional markets and Bitcoin, but we're starting to see that separation. And to further point that out, we're going to head over to Bitcoin and talk about the market cap. So let's take a look here. You not just have a huge market cap where the dominance of Bitcoin right now is sitting at let's see, 48%, where it was just at 50% last week. But what I want to point attention to and point your attention to are the things that people aren't talking about. Take a look at Tether here. You've got almost $83 billion sitting in Tether and another USD coin here sitting at $26 billion. Now, when you look at almost $110 billion sitting on the sidelines waiting to enter the crypto market, this is also something that I'm really watching because this is not money that's coming from institutional investors getting ready to enter into the crypto economy. It's already in the crypto economy, waiting to be spent, waiting for plays to happen. Again, what do they know that we aren't watching right now? I'm expecting something big is happening. When we look over at the whale wallets too, we're going to take a look at this. Look at these here, the non-zero addresses and the number of addresses that are going up in terms of how many are holding over 1 Bitcoin, over 1.1 Bitcoin. It's going up every year. We're right now seeing that the number of total addresses that hold over 0.1 Bitcoin are over 4.2 million addresses. Now that's going up exponentially from where we were looking at 5 years ago. So this is the kind of thing where I'm saying if we're doubling our user base, adoption is strong. Adoption is very strong. And it brings me back again over here where you're saying we have a huge amount of user adoption. The number of wallet addresses that are showing in Glassnode are increasing so fast. We have a large amount of total addresses totaling at almost 1.1 billion user addresses. Now, as the price of Bitcoin grows, we can only suspect that we'll see higher prices and more adoption. And these are the things that I'm watching as we continue in this. So let's take a look at this other one here. This is a great conversation where it talks about Bitcoin versus gold. And the experts are talking about what would they rather hold? Well, to me, I'm going to look at the data. I think the data tells us more than anything else. When you look at long-term trends, this is for you who value gold and want to think in gold. So for me, I think in Satoshis, and we're going to be sharing charts that show that perspective in the future. But today, I want to show you what I'm seeing here a little differently, which is we've got Bitcoin, who is sitting here at roughly about $30,000, which means it takes about 15 ounces of gold to buy that Bitcoin. 15 ounces of gold to buy that Bitcoin is not a small deal when you're talking about how many ounces you have to stack. Right? 15 ounces of gold is not a small number, but let's take it in comparison to 2010. In 2010, or let's even go to 2015, it took you almost 0.3 ounces of gold. So that means that you could have bought almost over 3 Bitcoin with 1 ounce of gold. You fast forward to 2018, 8 Bitcoin. So the story here that we're seeing is over time, it's going to take you more gold to buy the same amount of Bitcoin. The question for you is, are you prepared for your wealth to be stored in Bitcoin, or are you prepared for your wealth to be stored in gold? Because if you are looking at the position that gold is the ultimate reserve currency, I think you're missing the boat, and the story's here in the charts. So until next time, guys, stay safe and keep stacking.